Good evening, everybody. We're going to get going here in about 4 minutes.
Hey Benny, I got a question for you.
Yes,
Hello?
sir. Yes,
Hey,
sir.
through the Forex trade room, the the Telegram, I haven't seen any you guys have any put anything out lately? Because I haven't seen anything.
No, we haven't done a lot this week because we've been working on the project.
Oh,
So
okay.
we'll get back going on that next week, and we may even see some this evening. But we've been covering a lot doing the trade sessions too. A lot of setups that we're
Oh,
looking at
okay. So they just
doing the
got they
live
just
sessions.
yeah.
Yeah, yeah. So we've been going through the charts all week and finding setups. We just haven't because we've been busy with a project that we're working on for everybody that we haven't been able to do a lot of the putting a lot of the Telegram markups, but we've been
Right.
marking them up doing the live sessions though. So
No, I wasn't that. I was just making sure it wasn't nothing wrong with my Telegram. Like maybe I
no,
had
no, no,
missed it.
no, no, nothing's wrong with the Telegram. Appreciate you bringing that up. So pretty sure people wondering the same thing. Yep, it's a good question, man.
And I got another question for you, man. You ever had a problem with your MT4 on your cell phone, on your Android? You would use Android, man?
I have used Android in the past. I have an iPhone now, but when I had it, I didn't have any issues. You know what? I did one time, and what I did was, I don't know if it crashed or what the MT4, but I just deleted it and reinstalled it, and that worked for
Yeah.
me.
Right, I did that a few times and it still didn't work.
Still not working. The MT4.
It's it froze it out. Like it just I deleted it a few times,
Yeah,
reinstalled it, and it just disabled it. I can install it, it just can't do anything.
that's weird.
Yeah.
Yeah, that's weird. Typically, I would just, like I said, the one time it happened to me, I just reinstalled it, but then I didn't have any issues. So maybe you have a lot of other stuff on your cell phone running, a lot of other apps.
Nah, cause I use it like for money, so I don't
Oh,
put a
okay.
lot of things on. You know what I'm saying?
Yeah, no, I got you. I got you. Yep. Maybe you have to try to check in, go to the site, maybe try to check in with support.
Yeah, I did that. I did that.
Mm-hmm.
Yeah.
Mm-hmm.
Thank you though.
Oh, no problem. No problem. All right, all right, all right. The time is 9 o'clock, everybody, Eastern Standard Time. So we are going to get this show on the road. So no technical difficulties so far tonight. So we should be all good. And I think everybody hears me, but just in case, because every once in a while we get people in the chat that say, I can't hear you. So I always like to make sure that the majority of us can hear me. So if you could drop me a 1 in the chat for the sound check, really appreciate it. All right, good deal. Thank you, thank you. So the chat is working. So let's make sure that we turn off any and all distractions, grab a pen and paper for notes, and let's make sure that we continue to do an amazing job of participating and engaging in what we're gonna go over tonight. So just a brief disclaimer, trading the Forex market, as we all know, is risky. So never risk money that you cannot afford to lose. I am not a CTA, which stands for Commodities Trading Advisor, meaning that everything that we cover tonight and go over is for educational purposes only. We can show you our strategies, we can teach you the fundamentals and the technicals, where we're looking to get in and out of trades, but at the end of the day, you are 100% responsible for your own account. So with that being said, hello to everybody that just joined us. Welcome to the Inner Circle Live session. And for the new people that may be on here tonight for the first time, I am your host, Benny Allen. And I will also have here probably shortly my awesome partner in crime, Mr. Ryan Carthage. So with that being said, we are going to get into the charts. If you could, please, if there's any pairs that you want to cover, make sure that you put them in the chat so I can make sure that I copy them down. That is as soon as I find my pen. And we're going to get things going, check out some things going on and happen fundamentally in the market today. Check out our trading economics website and a couple other things. And we will start tearing through the charts. Okay, so let me see what we have coming through. Aussie CAD. All right. What's up, Shauna? Pound Aussie. Euro Aussie. Okay. Okay. All right. Okay, so we got a few. We'll get going. But first, let's talk about GBP USD. See, and the USD CAD. All right. And give me 1 second here. Okay, so that'll get us going. And let me check my participants here. Should be all set here in a second. And we are ready to go. Ryan, what's good? How you doing this evening?
What's happening, bro? You doing well, man?
Doing good. It's been a really good week. Doing pretty good. Doing pretty good. So, been a really good week so far. And I hope it's been pretty good for all of you, whether or not you're just learning, watching the videos, or you're, having a demo account, trading paper money, or if you're in your live account, right? I hope things are starting to come together for you, right? So let's talk about some fundamentals. So we had the ECB today, right? European Central Bank came out and said that they're going to start to moderately reduce the pace of asset purchases under their program, right? That started with when the whole COVID pandemic broke. So they said they're going to start from Q4 and they're going to do it amid improved economic and financial conditions, right? So they still kept the envelope at 1.85 billion until at least the end of March 2022 or until the coronavirus crisis phase is over. So interest rates were also left at record lows. So they're not going to raise the interest rates. The market reacted crazy. I think it was an overreaction because they do have some good economic data. They're going to moderately start to reduce the pace of asset purchases, right? So the bond buying and things like that to increase the money flow in the market. But I guess, the way the market responded early based off emotion doesn't seem like they were, too happy. I think they weren't happy with the fact that they thought they would do it sooner. Right, they kind of left that hanging out there. At a faster pace, I should say, not necessarily sooner, but at a faster pace. They said they want to keep it at a moderate pace, and I think the market reacted to that negatively. But I think it was ridiculous. I think it was a total overreaction. That's just my opinion. But the saga continues. Of course, typically this would be a super good thing, but you've got that one main variable, and that's that coronavirus, right? That's kind of holding these economies back around the world from just outright exploding. So, and seeing super growth. So it's going to be back and forth for quite some time, as long as we're still dealing with the increase in the coronavirus numbers. So that's what happened with the ECB today. You saw the prices drop off the reaction, but I think it's ultimately started to settle down a bit. And when the dust clears, I think that euro is still stay bullish to the upside. Also, the initial jobless claims beat forecast. Okay, they beat the forecast. So if you go over to investing.com, you got an article that says Wall Street ends down after jobless claims hit an 18-month low. So can anybody tell me? Can anybody tell me why they think Wall Street ended down after you got jobless claims that hit an 18-month low? That's a good thing, right? So why would it end? Why would Wall Street end down after that? Can somebody answer that? Anybody want to take a shot at it? Tell me what they think. No?
I'll take a shot at it.
All right.
jobless claims are down, meaning people are getting back to work. So therefore, that's more reason for the government to continue to cut down on their spending and potentially increase interest rates sooner.
Correct. Bingo. Right. So that is a great answer. So Shauna said people aren't spending. So let's take a look at this with Wall Street. All right. So Wall Street, like Ryan said, right? Really, really good answer. Ryan said, hey, jobless claims are down, more people are getting back to work. Okay. So what Wall Street likes to cheat money. They like the Feds continuing to provide that floor, right? Which is what Ryan is alluding to. So if you think about it, guys, if you get more people back to work, that means employers are paying out more money, right? And they kind of played it with Sean and Sam, but in the opposite, right? In the opposite direction, when people get to work and they get money in their pocket, what do they normally do with it? Right? They normally start spending it. So if you get more and more money in circulation, that starts to heat the market up, heats the currency up, meaning that you start to see inflation go up. Okay. Inflation goes up because you got more money circulating in the market. And one of the tools that they do, right, is they start to cut back on they start to taper, right? That term we all know now. They start to cut back on the purchasing of government assets. And like Ryan said, the other tool that they use is they look to raise the interest rates. So that's why Wall Street reacted, because that's what they're thinking way down the line. They're thinking like, okay, this is going to put more pressure on the Fed, even though Powell has pretty much been stone cold in saying, hey, 2023, 2 interest rate hikes, and he hasn't seen enough out of the economy in regards to it becoming more and more consistent, that consistent growth, for them to do that. But so maybe they're thinking, hey, they're talking about tapering. They've been talking about that. That's definitely on the table, but maybe it speeds up the time, right? The timetable for doing some aggressive tapering. So
my question is, Benny, I got a question. Like, okay, if it's more money, more people making more money, doesn't that help the economy? Does that mean you got less people on welfare, less people pulling off the economy, and they're being taxed at the end of the year? They're being taxed in their checks. Isn't that another flow of currency that's being pulled into the economy?
In one aspect, it helps, right? Economic growth.
Right.
But from an investor perspective, if I'm Phil, the big investor, and I want to take money and I want to continue to put it in riskier assets like the stock market, right? I use what? What money do I use? OPM, other people's money, right? I want to take that money. I want to borrow the money and invest it in the market in the riskier assets and make a return. But I don't want to borrow that money at a higher interest rate. You get what I'm saying?
Nah, not really. Not really.
If you wanted to buy, right? Think about it. If you wanted to buy like a billion shares in whatever, and you wanted to borrow the money to do that, you wanted to flip the money that you borrowed. Do you want to borrow that at 1.25%, or do you want to borrow that money at 2%?
1.25. I want it cheaper. I want to buy it at the lower is the better, because you right. I want to buy it at the 1.5, 20.5.
So you understand that? Then you understand.
Right. I get it. Yeah.
That's so as an investor, right? We're talking about Wall Street. We're talking about Wall Street, right? So Wall Street is like, hey man, that can heat up the market, and a lot sooner than later we can start to see inflation rise, which will put pressure on the Feds. First for tapering, to speed up the tapering process, right? They're cutting back of buying government assets. Okay. So that the reason why you keep seeing the stock market continue to go up, right, is not necessarily because of this booming economic growth and expansion. It's because they know that the Feds, they keep risking money, because they know that anytime that the economy even seems like it's getting in trouble, the Feds just print more money and they provide a floor for the market. So they're just buying the dips. They use
So,
and they borrowed the money to do it. So in one
now it sounds like
aspect,
a hustle. Okay, okay. From what I'm hearing now, it sounds like a hustle. Like if they could keep the economy messed up, then they can get money cheaper, right? Is that what you basically what
right?
you're telling me?
But there's it's how they shift their assets, right? So they may slow down. We're talking about Wall Street. We're talking about stocks. You're talking about one asset class, right? So we're talking about Wall Street ends down. Wall Street. But for example, say they speeded up the tapering process, right? And then eventually it sped up and they had to raise the interest rates. Well, okay then. I'll just take my money out of Wall Street. So Wall Street will slow down because that's risky, right? Stocks and stuff are risky. I'll take my money out of Wall Street. Yeah, the interest rates are rising, but what can I do? I could just go buy government bonds, which is a more of a guarantee, right? Is really the safest play because the interest rates go up than your yields, right? You're looking at your bond yields increasing, so I can get a decent return, a safer return, if I just shift my money to a different asset class, right? So then what do? Okay, the dollar's getting strong, the interest rates are getting stronger. So then I'm gonna take some of that money and maybe I go to the Forex market, which is what we're playing in, and I start buying a dollar. So now I'm in currencies, right? So they constantly shift and move their money. It doesn't mean that they're going to stop investing. It just means they're going to decide, they're going to change, right? And they're going to, with their portfolios, they may allocate money to different asset classes based on what the read that they're getting for the market. So based on this jobless claims report, right? This is telling them when they're keying and they're focusing on inflation and interest rates off this report. And that's what they're concerned with. Like, is it going to be more expensive for me to borrow money? If it becomes more expensive for me to borrow money, then I may reduce what I'm doing on Wall Street, right, in my stocks, and I may shift that to another asset class, right? Or you might go from the S&P to maybe when it's expanding, maybe I shift my stuff to commodities, right? I shift more of my portfolio to commodities because during times of growth and expansion, commodities tend to do well. Boom, stimulus bills pass, whatever, however many trillion or whatever, what was it, Joe Manchin is holding up the bill, right? If they get that an infrastructure bill, then you may see a commodities boom because there's going to be a demand. If we're rebuilding infrastructure, there's going to be a demand for certain commodities, right? So it's just an ebb and flow, back and forth, right? As far as where they're shifting their money. Okay, so you may see that's why you see at certain periods of time, tech stocks do real good. Then there's certain periods of times where your commodities are doing good. Then there's certain times where the bond buying is doing really good, which that's where the dollar can strengthen because in order to buy US bonds and invest in the bond market, you have to run a currency exchange for that. Right? So the dollar can strengthen. The dollar will see strength, which it just recently did. The dollar saw strength because you saw the bond yields go up. Right? So it's a great discussion to have. It's a back and forth type of thing, but it's really just a shift in asset allocation in regards to where you're gonna put your money based on the reports and things that they're marketing, whatever their strategy is, right? For that firm or whoever, or that individual, whoever it is, whatever their strategy is, whatever indicators they're looking at. Okay. So
okay, I get you. Like I've been reading them. I've been going on this website and that website, and some of them I'm not able to decipher. Like I'd be like, I'll read it and I'd be like, I wish we could just have a session on just deciphering all of this because
so that's one of the things that we're working on, right? One of the things that we're working on, kind of alluding to what the question you had about the Telegram, which was a good question to ask. And then two, right? The best thing to do is you be like, you know what? I don't understand that. Whatever that term is or whatever they're saying. So I'm going to pick out my cell phone and be like, google.com. Boom. And then if I don't get it from there, hey, I'd rather listen or watch a video, then I'm going to go to YouTube. Boom, the biggest and greatest university in the world, YouTube. And then I'm going to check it out, right? But we are working on some things in addition. So that's how I learned a ton of stuff. It's just like, I was in it, hey, I can't decipher this. I can't decipher this. What does this mean? And then that's when I just started getting, I'm kind of a trade geek. So that's how I learned a lot of stuff. The beautiful thing is this isn't 25, 30 years ago where the information just wasn't there or you had to pay a lot of money to get a hold of it. Right now, it's all at our fingertips. So good questions, Phil. Good questions, Phil.
Hey, can I make this comment, Benny? And then we got another question / comment. from somebody, but you got to look at it from a perspective of the investors are looking at it from how can I make the most money, right? Or how can I preserve the capital that I have, right? Phil, I think your comment is coming from the perspective of the people of the country and getting back to work and being able to take care of their families. But investors are sheerly looking at it from what way can I benefit most? Is it investing in the stock market or is it investing elsewhere? And their mind is sheerly set on how can I make the most money? That's it. It's kind of a harsh way to put it, but that's what it is. How can they benefit most? And how can they benefit their customers, right? Because they're investing other people's money at the same time, right? 401ks and all this kind of stuff. So what do I need to do to put this money in the best position to make the most profit? Because at the end of the day, if they make profit for the people that they're investing for, they make more money too. So that's sheerly their focus. It's not about people getting back to work and that being a great thing for the country. It is, but that's not what their mind is set on. So I hope that kind of clarified a little bit.
Yeah, that's exactly what it is.
Yeah. And is D.A. Silver Fox, is that Danny? I think that's Danny.
No, that's Vincent Brown.
Vincent Brown, I'm sorry. Vincent Brown, okay. Vincent asked, is that people are getting back to work or they're giving up looking for work? Now, that's a great question. I'll give my input and then Ben, you can answer that question from your perspective too. It's a great question to ask. My comment to it is, they don't care. Whatever the number says, they're going to respond to it. They don't care if people are just stopping looking or if they're stopping or if they truly are getting back to work. The fact of the matter is these claims are no longer happening.
Right.
So if the claims are no longer there, that indicates that there's a potential for people to spend more money.
Got it. Okay.
Right. That's just my perspective. And I'm more of a pessimist when it comes to the government and investors and that kind of thing. So that's my pessimistic view of that number. But Benny can give the more technical answer to that question.
That's pretty much it. But they do when they break that, when they look at these numbers, they do have economic data on that, on how many people are just giving up looking for work. There's a way that they track that. But overall, they don't care. Come on, guys, look, how many times have you looked at, maybe we're all trading now, we have some people that are brand new, and maybe back in the day before we all started trading, we didn't really pay attention to it. But how many times have you seen every news station report that Delta or some major company in America have laid off 1,500 workers or 2,000 employees, and everybody's like, oh my God, that's terrible, but their stock goes up. Right? The fastest way to create revenue on your bottom line is to kill jobs, right? So from an everyday worker, right, a W-2 perspective, you're like, that's horrible. But in the stock market, it's a totally different mindset. It's a totally different mindset. But I think though, what's amazing is what happened with COVID and why you're seeing things, right? Because we also have seen a record number of small business applications filed. See, everybody keeps thinking that it's about this $300. Oh, you cut the 300, everybody's going to go back to work. But there have been a record number of small business applications filed in the United States since COVID. Right? We see what happened with Reddit. We see in Reddit and GameStop, people are starting to figure this out. Right? Knowledge is power. People are starting to figure out how the money is really made, not only in America, but throughout the world, right? So more and more people are starting to take on that investment mentality. And I think it's an amazing thing, right? That's why I say you'll never see me poo-poo on any type of job. I was just talking around the other day, like, man, you're gonna see me working at Walmart smiling one day. And they're gonna be like, why is this guy smiling? Because I know what to do with my money. I know how to flip the money. Whether you make $12 an hour, $15 an hour, if you know what to do with the money, right? You can make money from money. And that's an amazing thing. It seems like, oh, okay, you can make money from money. But when you really think about it, that I can turn 20 cents into $1 at the click of a button, that's an amazing thing when you talk about most of us are raised in the labor force.
Right.
It's amazing, right? I sit back in my phone or my computer and it's like, man, this 20-cent trade just went to $5. Like, wow. And I didn't punch a clock for it. So more and more people are starting to take on that mentality, and I think it's a good thing. But it does seem shady. It does seem it does seem like a hustle, but that's capitalism, everybody. Right. And it's not going in. I don't care how many, I don't know how many politicians get up and talk. It's not going anywhere. There's been no other economic system to raise people out of poverty into the middle class than capitalism. That's just a fact, period. It's not going anywhere. So I think it's best that we all just kind of learn how to play the game. So,
Right.
all right. Yeah. So that's a good conversation.
Thanks for that.
Yeah, you're welcome. It's a good questions, great conversation. Because it's like, man, how's Wall Street poo-pooing on this and going down after more people back to work? That's a good thing. But that's how they think, and that's their thought process. And Ryan really put it where the ghost can get it. Like, it is what it is. So, all right. So a few other people join us. Welcome. Ron, good evening. So you had
Hey,
your
guys.
hand raised. Hey. So
Excuse me, don't mean to interrupt. Can I say something real quick before I forget? Because I may not be on this entire course tonight.
okay.
If you, first of all, I want to thank you, Ryan, and Casey for this course. It has definitely been an eye-opener for me. Over the past month, it has been life-changing. Of course, I've known Benny before I joined, but I just wanted to congratulate you three on something that's so amazing. This thing has changed my life over the past month, and I wanted to make sure that you three was aware of that. So thank you.
Ron, we appreciate it, man. We appreciate you. We appreciate your support and hanging in there with us from way back when, before this was even started.
Yes, sir. Yes, sir.
We really appreciate it, man.
So to all you newcomers, you're in the right place right now.
Thanks, Ron. Really appreciate that. All right. So with that being said, it's good feedback. Thanks. Let's get it rocking and rolling. So let's go look at this pound dollar, because we worked through that last night. Ryan touched on it this morning, and the reversal play worked out, right? Depending on where you got in, a B boundary, right? We're through pretty much at 3 take profit levels, right? We drew it up, saying, hey, we're looking for a pullback on this, and then another potential short. So we'll see what happens. We got a stochastic back in the buy zone, but from the B boundary, right? That's the highest point. That was at over 90 pips. And if you take it around as 118, if you had an order there, 118, 127 zone, it's over 100 pips, just like that. Boom. In a day's time. So that was a beautiful play. So we do have the deep pullback, and we're going to see what the price action continues to look like on that. Let me check the DXY now, since we're at the end of the day, and see what that dollar is doing, right? Because I know we were getting that pullback that we talked about earlier. And yeah, so look at that. So we've got a pullback to a 50% level to test the backside of that trend line, right? So we're not always right, but sometimes we're right. So there we go. So there's your AB boundary on this new fib. You got a trend line break. You had an 80-20 play on the DXY. Of course, we don't trade it, but the price action is the same nonetheless, which I think is amazing every time that I see it. So here's your capital fib. Here's that deep retracement that we had on the dollar as of late. Okay. And we turned around at this 8.6 level. And now we've got a break of this downtrend line and a pullback right up against this daily support level. So, and we got this stochastic on a 4-hour that's oversold. Okay. So we'll just continue to watch this and see if we can get dollar strength, right? So if this continues to push up, this is the DXY, so we can look for dollar strength. And so what you may see on this pound dollar pair, okay, is you may see this hold. This was a strong move, and usually with a strong impulse move like that, a lot of times you'll start to get some consolidation, right? That battle between the bulls and the bears, that equilibrium. And then it's up against this trend line here. It's pressing up against it. Stochastics in the buy zone. We're in the Asian session though, so we'll see what that looks like coming into London and to the New York session tomorrow. Tomorrow is Friday. Keep that in mind as well. And we will see what this pair wants to do. But right now, we got the reversal play that we talked about last night to the tune of anywhere between 90 and 100 pips, depending on where you took it. And now we're just seeing what it wants to do next, right? So we're not going to guess. We're just going to try to figure out and see what it wants to do. If I put a sub fib to the upside on that, we've got a brand new AB boundary, right? So naturally you're thinking what? Reversal, and then maybe take out your and a continuation down, or it may push up to this daily resistance level, this red dashed dotted line right here, which is in confluence with a 127 off this sub fib to the upside. So hey, when you've done well, right, on the buy, 90 to 100 pips, right, depending on how long you held it, or if you caught any pips on it, you're good to go right now. We just kind of sit and wait and see what type of reaction we're going to get on this. So if it continues to push down, then we know where our target is. We know where our target is. So let's go back up to the daily and look at some of the targets that we had mapped out. All right. So here's this down AB sub fib here. This is the D extension on that fib. We've already got a 50% pullback twice. It double topped, okay, in this area, here and here, in confluence with this weekly level. And now we're pressing up against this trend line. So first stop is the D extension on this sub fib, and then ultimately we would like to get that 382 level, okay? We would like to see that 382 level hit eventually. So we will just wait and see. We've got the trend line breaking a pullback. So we'll see where the critical area, and we'll see who wins, the bulls or the bears, and then we'll play it accordingly. So good job on that, everybody. Good call on that reversal last night, Ryan. It paid off. It paid off. So anything to add on this one, Ryan, or any questions on this pound dollar and where we are right now?
No, sir.
No, we're good. Okay, so let's check out the USD CAD. All right, so we'll take a look at our daily. Okay, and we're saying, hey, we've been chasing this 382 right here on this down fib, okay, for quite some time. All right, we got a stochastic that's still in the buy zone, and we've got this fib prices dancing around in between this AB boundary, but at the end of the day, we're starting to get a push up, okay? We're at this key level here. Let me, at this close, depending on how this closes tomorrow, I'm gonna add this level because you'll have a swing high there. So I don't wanna, I'll keep that there because it didn't close above this level here yet at 127.07. That's why that's still hanging in there. Because you guys see, quick little lesson. If you guys see here, these candles, they broke the level, but they didn't close. So the smart support resistance is smart enough to throw that right back in there, right? Because it hasn't closed beyond it yet. So if you get the candle to push up, right? If you get this candle to, should make that green just for visual. If you get a candle to push up and then close on the backside of that, then it's going to be, okay, what's the next play? So if this candle were to close beyond this 127.07 and it didn't take out this high, then this is going to be your next level of resistance, because then that would give you what? 2 candles to the left and 2 candles to the right that are lower than this center wick high. So that's a swing high. That's your foundation for a resistance level, a ceiling, just like you see up here. Okay, that's how support and resistance forms. All right, so always good to go over that. So right now that's still holding there, and then this level here. So I'm not gonna mark it until we get that candle to close. We'll just know where that high is. So we go down to the 1 and we can kind of look at our price action, right? So we almost got it taken out, but it held, right? So we'll see, we're going to see from this lower time frame perspective, if price wants to continue up, even though we're in the sell zone, right? It could push sideways, or if it takes out this A, then we revisit this setup. Okay, I didn't take this B to C move, it was too crazy, right? Been moving kind of funny, but if you take out this A, then that's okay. So we've got this long-term trend line here. So let me thicken this up a little bit. This is a long-term trend line here. Okay, moving to the upside. So if it decides to take that A out and push down, that's okay, right? We allow the price action to do its thing, and then we revisit it if it comes back down here to the zone, which would be a beautiful play, most likely, right? When you look back at this level, okay, and where it's coming from, all right? So we'll see, matter of fact, let me zoom out, come back. This thing's messed up again. Sometimes they get misaligned when you bring them down through the time frames. There we go. So more so like that. It should be like that. So here's your touch, here's your push up. And sometimes it likes to come back down and retest that level. That's okay. We'll look to play it off that level again if it holds. So we'll see. We'll see how it goes. But that's a very deep retracement. That's to the point where you're really looking at, when you're looking at just price action by itself, you're looking at, when you get back to that A boundary, you're looking at a bit of a double bottom type scenario until it actually breaks it and takes it out. So that's one to keep in mind. So here's a touch, right? It failed to completely break out to the upside. It came all the way back down to the zone, right? So you always had a potential for a double bottom if you get price to take back 100% of the move that it made to the upside. Okay, so we have to look out for that, because that's virtually what that's really what that is right now until it takes it out. So we'll see if it turns over, continues to the downside, or if we get it to push up. So that's kind of a wait and see on that UCAT right now. I didn't play this to the B to C because of the way it looked on the 1 hour, so I haven't played this at all. So we'll see how it goes. Any questions on the UCAT? So just be patient with that one. Just be patient, right? See how it goes, see if it consolidates, right? See, you know, if you get see if you get, right? Put your trend line right there. Here's that touch, that second touch, put it through, okay? See what happens if it approaches this trend line, or if it pushes sideways through it, then you just continue to adjust it through the Asian session. And then if you were to get a trend line break to the upside and your stochastic has returned back to the buy zone, then you could be looking at a continuation to the upside, and you've got the potential for that double bottom, right? That double bottom here playing out, okay? So just keep an eye on that. That's what I would say on that one. I need some more confirmation if I'm looking to get long on that. If I'm looking to get long, if I'm thinking dollar strength like we saw on the DXY, then I just want to play this with some good confirmation. Get me that 1, 2, 3 trend line break, stochastic in the buy zone, and a nice bullish candlestick to close on the backside of one of those 3 candlestick formations, like a morning star or something like that. All right, that's it on the UCAD. No questions. We're gonna keep it moving.
I think we all good, bro.
All right, all righty. So let's shoot up to the Aussie CAD. We had a question on that. All right, and that's where we are after 1 hour, is just moseying on along, okay? Shallow retracement. All right, so look, if we zoom out, big picture, go to the daily. Let's go to the daily on this and take a look, all right? Big picture here, okay? We got the trend line break on this from this the retracement on the daily. So we've got a trend line break clean, like we thought. And now you got stochastic that's in the sell zone. Okay. See if we can get that pushed down for a pullback, right? So I don't even know, do we have the daily fib on that yet? No, we don't have. Nope, we don't have. That's the high price right there on this one. Yeah, this is the high price. So we need that's 2 more days on the candle for that daily fib to form to the upside. So we know we're in the sell zone. We know we've gotten a strong impulse move to the upside that broke through our downtrend line. We took out a resistance level here. Here's a swing high. We took that out. So we know we like to score a point and potentially at some point pull back. All right, score a point, pull back like so. Okay, so we're in this lower time frame and we're seeing this. Okay, and we're seeing this on the lower time frame. We're like, okay, we're getting close to this D extension. It's either gonna pop off the X area right here, this zone. It's either gonna pop off this zone. Okay, like so, and continue to the upside. Okay, we call that the X, right? Like that. It's either going to continue up, hit that D extension, and maybe try to reach what? Basic price action, guys. Look here, here. Okay. Here's an area right here. See? Okay. See that there? See? Here. Maybe it's chasing that. See how strong it stays? If oil continues to fall, you might not get this pullback on this fib, right? It may press up here, hit your D extension, press up here and give us a new fib. Then we start to see, right? Then we may start to see that retracement that we want. By that time, you'll have that daily sub fib to the upside of form, right? So you get that push up and then you might see that. And that's fine too. We just have to be patient. Then we see that push back down to the trend line. Okay, so we just have to wait and see what happens when tomorrow's Friday, Monday. So if this on a daily is going to be your high price on this candle right here, that's going to be the high. Then you got tomorrow, which is today really, and then the market will close. Then you come back in on Sunday going into Monday, and Monday close at 5 o'clock. You have 2 to the right. Then you have a brand new up AB fib like this, which is really just a larger fib to cover all those small fibs. And then we'll see what happens with the price action at that point. Okay, so that daily fib will look like this. It'll engulf all these small fibs, and wherever it forms that high, right, it'll look like that. Okay, and the reason why we trade these smart fibs is because it enables us to take advantage of these smaller waves while it reaches, right, that high price. That's the beauty of it. Okay, because I know a lot of people are trained like this. Oh, just pull it out. Pull it out like that, right? From an extreme low to an extreme high, right? And then if you get another high, then you just keep expanding it. And then people are like, if the fibs don't work, my targets are never hit. It's garbage, right? So this is why we teach you how to use swing highs and swing lows to set your floor and your ceiling, and then look at the pullbacks so you can take advantage of these moves as price moves up. Okay, so that's the difference. All right. So there we are on that. So it's kind of a wait and see, right? We're at a high price. I don't necessarily want to buy that right now, right? A scalper, right, on the lower time frames may look at this trend line and say, hey, if I get this price to respect this trend line, I'm on a 5 minute, then I'm gonna take this. I want to take this long, right? Maybe I get a trend line break to the downside, like so. Okay. Maybe you get a test of that, right? If you day trade, okay. Just thinking about that process, and you say, if I get this trend line break after this trend line is tested and I get it break bullish, then I'm looking to take it, right? So intraday play there. But knowing the fibs, right, you know that there's a potential that if that trend line breaks, that price can start falling. All right, so it depends on your trade plan and it depends on your rules. All right, so that's where we are on that. So take these out, clean my charts back up.
Question from Sean or Benny while you're deleting that. Can you explain the X?
Oh, just it's just a visual way to see where you got your major downtrend line, right? See how you got your major downtrend line coming that I brought actually from the higher time frame down, and then you see how you got your major uptrend line that I brought from the higher time frame. And a lot of times, especially if you get right a pullback and then price breaks up through there, because this is like the ultimate intersection, right, of your sell zone to the downside below this line, and then your buy zone to the upside. So it's just like, oh, when I was getting trained, they would be like, oh, price is in the X. So when it's on this top side, they're like, look, this may continue long, right? But the one caveat is we haven't gotten that deep retracement yet, right? So it's just here. Again, it's just, hey, price is in the X. And the same thing to the downside if you break below, right? If you were to break below, then you're looking at, okay, we can continue these down ABCDs to the downside. So that's what we mean by the X, just an intersection of where your downtrend line crosses your uptrend line.
Okay, what time frame did you drag them from?
Daily. I pulled that from the daily. Yeah. You could pull it from your you could draw from your one, and sometimes a lot of times it'll match up, but sometimes depending on how big or small the waves are, this just gives me a nice conservative trend line, right? Because I know to target, right? Because I know I can get super aggressive, right? Off this break here. We know we can tag a trend line here. We know that, right? Oops, that's my fib. But we know we can tag a trend line to this downside like that to catch that move. And we do trade on the 1 hour. But sometimes I like bringing that higher time frame down to my 1 hour. So just visually, I always know where I am, right? I always know where I am because I know if it comes off of this daily downtrend line and it breaks it, I know I've taken out my A's on my down fibs on my 1 hour, which we know that if I put the down fibs on there, most likely you starting to take out some A levels eventually, right? So I just like to keep that long term, right, on my mind as I'm trading. All right. So good question.
Question from Ken. So this isn't a good short play at the moment?
I would play it with a confirmation with a trend line at this point, right? If you're not limited in already, right? If you're not limited in already and you mapped out your risk, okay, then just wait. I would just wait if you could, right? Because we're approaching the sell zone. I would just wait for confirmation right now. Okay. If you're limited in, right? If you had your limit set, okay. It's not that it's not a good short opportunity. It's just timing when you see the setup, right? And how you want to play it. So being that I'm already up around this 118, 127 zone, if you limit it in, you went in drawdown, right? If you didn't get stopped out wherever you placed your stop, you went in drawdown and now you're back in profit. And if this continues bearish, right? If this continues bearish, then you get a break of that trend line, then we're looking at pushing down anyway to this 382 target, right? Like same play as always, okay? See the same play as always like that, right? If you get that break. So you see you're already pushing down. So if I came in and put a down fib to the top side, right? We see what we have, but right now this is shallow. So you can get a 127 and then an even higher push, right? A higher push back. So you just have to be conscious and aware of that, right? But even if this broke and then reverse back up, if your stop's above your A, if you play it like that, then you're gonna be good if it continues back down to the downside. So yeah, it's a good opportunity for a short, but just at this point, maybe you just wait for some more extra confirmation before you get in and take the trade. But like I said, if you're limited in already, right? If you're limited in at your B boundary, like so, okay. If you took the limit at your B boundary, bang, right? You went in the drawdown and now you got price reversal. right? And then we know that's when you're trading in smaller lot sizes and looking to compound and trade and add to it once it goes in your direction, scaling in, right? As we call it. But price seemed to be reversing, but we just want to see how it looks up against this trend line, if it breaks it or not, okay? Because you may even get a situation like this. Price may push down, and you may get a strong impulse move where off this shallow retracement, it goes all the way to the D. That's okay. You may still get a pullback off that new fib that'll form and then take it to the downside. So sometimes patience just pays, man. But no, it's not a bad, a bad sell opportunity if it gives you what you're looking for. Right now, if you limited in between the 118 and 127, you're just beyond break even now on that trade. So good question. Good question. Any other questions on this pair?
Phil typed in the chat, but oil is falling. Doesn't oil dictate the CAD?
Yeah, it does have an influence on the CAD, right? It does, but a lot of other things do too. So if we take a look at oil, right? We're starting to get that drop, right? But oil, you got your stochastic in the buy zone, you may get a pullback. And at the end of the day, right? If we break this low, then we may be talking big game to the downside. I have to read the reports on oil and see what the analysts are saying about the key level. But if this is being looked at as a key level, you may see people start to sell off strong to the downside. So what is this level here? This is whatever the zone is. This is 67.11, and we got a whole bunch of mess here. So here at this level was at 66.91, right? So if you read a lot of the financial reports and things like that, they'd be like, oh, we're looking at a key level. This is what they're talking about. They're just talking about support and resistance, right? And they're looking at historical data on it, okay? To look at how the market reacted the last time those levels were broken. Because it's already starting to come down through some levels now. So, but it's in the buy zone, right? So we may get a pullback. So you got a test of the downtrend line, push down, and then you're looking at the wave sequence. Okay. So if this starts to, right, if this comes in, and I hope you guys are all seeing how this kind of just flows, right? If this starts to find buyers to the upside off this price that it's at now, okay, and the Aussie doesn't strengthen, then you're going to see, right? You're going to see that price continue to fall. Okay. You'll see this price continue to fall because if that oil strengthens, then it may strengthen that CAD and weaken its currency since the CAD is the counter currency, and you may see it start to fall and retrace. All right. So thanks for bringing that oil up. It's something to keep an eye on, and we'll see how it goes. But you can see what's been happening with the dip in the oil price. We know the Aussie's been taking a hit, and you can see how it just created that sideways market where that's usually what you're going to get when you have either two strong currencies pinned against each other at the time, or right, it's all about price and time, or when you get two weak currencies, right? Same result, you get a lot of sideways movement and things start to chop. Okay, so if you even took this fib off, right, and you look at this level here, right? If you look at this level, this B boundary, this level of resistance that can act also as what? Support. This is a key area. Okay, so just something to keep an eye on. That's just good price action and structure there. So we'll see how it plays out. That's why I say, hey, let's get some more confirmation on that. Because at the end of the day, this was ranging forever. You got some push to the upside, but then it's come right back down into your range at this point. So it's just floating. But either way, eventually, right? That's why we use, extremely good risk management and trade small and scale in when we're using this style. Is because if we just give it time to figure it out, we can't force it to make up its mind. It's gonna do it on its own, right? Based on what's going on globally. So good question on the Aussie CAD. Good input. And let's take a look at this Euro Aussie. I definitely take these Euros today after what happened in the market. let's see what's going on. That's a 5-minute chart that we've been playing around with. So we look at it, look. So let's look at this Euro Aussie. This is the play we were looking at. And we were looking at this break. Okay. And the AB boundary held. I didn't have a chance to look at this yet, but I knew it it was a strong reaction. And I didn't think it was really warranted, you know, after the ECB reporting. But you can see where it pushed it down, almost took out the A, but then look, it's trying to recover. So, and now it's moving sideways. Okay, so I still, being in this within the AV boundary, I still would like to continue bullish. We were balling just not even 24 hours ago. we were looking good to the upside, and then ECB got to talking today, and this is where we look. This is what we look like now. We're back up above this downtrend line, and we're just in consolidation. Asian session. Let's see what happens, how it ends up on Friday. And see if we can get a continuation to the upside. But I still would like to think bullish on the euro. Overall, they've got good economic numbers. Yes, they didn't speed up or give a sign that they were going to speed up the tapering process. But overall, the euro has been doing pretty good as of late, especially versus that Aussie. So we'll see how it goes. So I really don't. It's kind of a wait and see. If you're already in this trade, right? Your A didn't get taken out, depending on how you set it up, right? If you set it up below the low and you got taken out, that's cool, no worries, right? We lose trades if you set your stop below that swing low. But if you set it below the A, you're still in the game, all right? You're still in the game, back up to the upside. And wherever you enter, you know, you may be up right now, you may be down. So if you enter at the 61.8, you're back up. If you had a 786 limit order there, you're in profit. So 2 orders would be in profit right now based off that recovery. As long as price doesn't take out the A, it has no choice but to go your way. All right. That's why we like to trade small and keep that stop out of that AB boundary if possible, when it makes sense. All right. Any questions on the Euro Aussie? That was a wild move.
No, sir.
Yeah. Bam. Right. So just a little bit there. I missed that tip. So, right. Fight, whenever you see that fight in between the AB boundary, oftentimes you'll get a harmonic, right? I didn't look at this earlier, so I would definitely spotted that, maybe even added an order. But there we go, right? So look, ABCD wave to the downside, right? That's how that's measured out. And what you do with that completion, right, with your harmonic, our C becomes our new what, everybody?
A.
And our D becomes our new what?
B.
All right. So how you play that harmonic, right? If you ever use the scanner or anything like that, you pull that like that, and there's your targets, 382, 61.8, right? Top of your boundary, and then beyond that. Okay, that's how harmonics are set up. Which you already trade that with the B to C move, see? Without even being able to realize and recognize the pattern, you're already doing it, okay? So you got the ABCD, right? You just don't have the extra A leg, which creates that pattern. So you all are learning a lot. So good job. That's it on the Euro Aussie. Any other questions on that?
I have a question
Sure.
with the harmonic pattern that you just drew. So usually when I mark up, I mean, I don't draw the harmonic patterns or anything like that, mainly because I don't know where the points go. So how would you know to like exactly where to place the points and all of that? Because I kind of got confused when we had the fib that's already on there, and then you drew the A, B, C, D. I'm just confused on how you drew it and how you knew where to place the points.
Because you always start with an impulse leg, right? And the simple answer is time, right? which is why we beg people to spend time on the charts and get your visual reps to improve your spatial intelligence, right? But the way I know to look for them in space now, there's people that can spot harmonics in small, tight consolidations and things like that. I mainly look for them to set up the type of pattern to be able to visualize it. Now I draw it out, and I let the smart trader tell me, you know what I mean? Like, okay, this is a Gartley, this is this, this is that, because they all have specific Fibonacci ratios. That's why we teach the fibs, it's fundamentals, right? So if this is an AB boundary, and then you start to get this consolidation and this fight between the bulls and the bears, and it fails to break out. So this in essence, this A to B is my X to A leg, okay? Is my X to A leg. So the way you measure that out is you'll get this X to A leg, and then price retraces to a certain Fibonacci ratio, right? So a 61.8. And then what you would do is you would pull this fib out here on this swing, and that measured between a 786 and an 86. And then here to the downside off of this X to A again, this came down to like a 8.6 level. So all those Fibonacci ratios they come in to give you a certain pattern, right? So based on the fact that this retraced to a 61.8 zone, okay, like you see at the beginning how it's giving me all of those different options, right? So let me hit escape on this. So you see here, right, based off of that pullback and where it landed, right, off that retracement, all of these type of patterns are in play. It depends on how the ratio continues to play out, right? Hold on, let me go back, get this off of here. Is what creates the pattern, see? Now look, see how it's shifting, right? Here's another swing high, okay? And then look, here, right? And that's how you know. At the end of the day, right? If you want to keep it simple, I don't, you know, a lot of time, I don't know, you know, the backgrounds that people have, but when you're in a lot of like a lot of your network marketing companies, things like that, they'll start out and be like, oh, it's easy. It's so easy. Just look for the M's and the W's. Look for the M. Girl, that's all you gotta do. That's all you gotta do, girls. Just find the M. It's simple. Yeah, okay. But this is like that. You just start to see it. You just develop the spatial intelligence for it. But I know anytime that how I spot it within my AB boundary is that anytime this pattern, this ABCD move, which is a pattern within itself, okay? Whenever I see it fail to break out, like so, this is your traditional ABCD move like this, okay? All right. A, B, C, and if it followed the flow, it can consolidate a little bit, then push up, but D, right? But if you see, this failed to break out. You see that came up around that B boundary and then pushed down deeper? That just sets off, just from time, right, on the charts, that just sets off all types of alarms inside my head that this could be a potential harmonic. Because I know, like it didn't break out. See how what this was my C, right? Easy way to take a look at it. Like you see how this was my C originally. That was my deepest point. And okay, I got a 61.8. Okay, boom. I'm expecting a 1.618D extension. But look what happened. It pushed up, and then it came down deeper within the AB boundary. That's why we say it's a fight between the bulls and the bears within the AB boundary, right? So that's how in essence I find them. Only really the ones within the AB boundary is what I like to look for, right? If I see them, but you don't even really have to know it, because the way it gives you, it's really just an extra confirmation. Is really what it is, right? It's just that's why you have harmonic scanners and as an indicator. It's really harmonic patterns are really just an extra indicator if you want to think of it like that. right? Just giving you confirmation that this is a possible what? U-turn point. It's a possible U-turn point, right? But if you came here with your fibs and you're like, well, I'm within my AB boundaries, as long as it doesn't take out the A, has no choice but to go my way, that's telling you there's a potential for a U-turn, right? Or if you said, you know what, this failed to break out, right? Not even knowing, not even seeing the pattern, this failed to break out, and oh, it formed another low. We know anytime we get a swing high and a swing low, we could drop a fib on it. So it would, in essence, would have took you in the same zone for the reversal, which is what people that have been with us for a while. They're very, very good at spotting those, right? That's how Ryan spotted, right? When we were coming down to the analysis last night, he was like, oh, hold up. Yeah, we got to push down, but this created a low. So you can put a fib on that, right? There's a possibility that at some point, this is going to retrace, right? So without even knowing anything about a harmonic pattern, right? It's just like, okay, okay, I got it. I see the reversal because I know how to use the fibs and place my fibs. So if this was a harmonic pattern, X to A to B, B to C, C to D, right? Then you still are in the same position regardless. Okay.
Okay, that makes sense. I was just trying to see if I was following you when you drew it, because it seemed like so easy for you. And I was like, how in the world does he know how to place this pattern on here so easily?
Yeah.
And I just didn't understand it at the time.
Yeah. And it's just like, it's time, which, just time, man. Repetition is the mother of all skill, like we always say. And because prior to this, I did used to use a harmonic scanner a lot. That's how I find that. If you guys like, I was taught the BTC reversals in my education, but then it really hit home when I used to use a scanner. And I'm like, that's all this thing can set me up for, BTC reversals. Like if I just drop my fib, right? We know that based on my education, the market likes to retrace to a certain level once that B boundary is formed, either immediately or at the 118, 127 after it's shallow. Like, so then I just kind of put the two together over the years, and it was just like, I could be my own scanner. I just had to know how to drop the fibs and trade the reversal. It's a counter trend trade setup, right? It's a counter trend trade setup most of the time, right? So that's how I kind of developed an eye for it. Is I used to just see the patterns all the time, really. So, all righty.
Don't feel bad. I still struggle seeing those godly and those M patterns. I can spot a head and shoulders, and I can spot a crown pattern, but spotting the godlies and those sorts of things, I still haven't caught on to those. So don't feel bad. Like you said, it takes time and really, really studying, looking at those consolidation points to really, really be able to identify them. So
yeah, and then just think about it, like, right? People trade these markets every day and make a ton of money and don't know nothing about a harmonic pattern. So
that is true.
So that's what I'm saying. Like, it's just, it's sometimes you can get paralysis by analysis, right? If you add too much stuff, it's just something that I just have. When I spot it. Like, I don't go on harmonic pattern hunts at all. Like, I just know that within the AB boundary, if I start to get some consolidation and a failed breakout, I start just visually like, okay, is there a pattern here, right? But either way, you would come out on top. If you would have put your stop below the A on that move, you still would have caught that same reversal. So, because you don't know a harmonic pattern is a harmonic pattern until it completes. Think about that, right? So half the time with the way we run the fibs, you're already in the setup, right? And plan it to whatever direction before the harmonic pattern is even completed. So, yeah. So take a look at this pound Aussie. This is a beautiful swing, beautiful swing. If we look at it from the higher time frame, right, it just makes sense, right? It just makes sense. Like, okay, all right, okay. We've got an AB boundary, right? Pushed up to the 118, 127, pushed down, broke our trend line at the 61.8. Look at that, 61.8. No, it's a 50. I'm sorry, 50% pullback. broke our trend line to the upside. Our daily stochastic is still in the buy zone, right? So with this downtrend line, we know that all of these blue candles were in our sell zone. So all we're doing when we go down to the lower time frame is we're just zooming in on this leg. And this just looks like candles here because they're daily candles, days worth of price action. But in essence, right, they are all, right, on the lower time frames. This is just making smaller ABCDs, right? Smaller ABCDs to the downside, right? Look at that. Okay. And then it said, I've had enough of this trend line, and it broke it. So if you go down to your one, the reason why you have down fibs is because just like we just drew on the daily, okay? And I go over this all the time because that was my hiccup in the beginning was I didn't have the spatial intelligence to see, to correlate the time frames. I just didn't, right? I didn't. So look, this is what we just drew, right? If I were to trace those waves down that I just drew, you would see it. So on your smaller time frames, it's a smaller wave. Didn't look like much on the daily, but then you've got these plays that are below your trend line that are happening that gives you the B to C type setups. And then you got confluence where you came down to a key fib level with structure from the higher time frame. And then you got the reversal. And sometimes this is where people technically get beat, right? Because if they don't use the higher time frame analysis, you're like, this is going short forever. I'm short, no problem. Then you get smacked with a reversal, you get stopped out, right? And if you're over leveraged, you just blew it and you think the market just hates you, that one person out of billions of people on planet Earth. And now you don't know why, but because from the higher time frame, it came to a key zone and price reversed, right? And price reversed. So you saw a reaction, you had buyers there. There was a demand at that level, okay? And now price is pushing up. So a lot of times I've started to just delete some of these areas and these moves because I know sometimes it gets confusing to people. But if you just clear those down fibs out, you can see that, look, all it was is that price was making lower lows and lower highs in our sell zone. And now price has reversed. And depending on how this pulls back, if this pulls back, right, we already got it drawn up. So if, if this, let me delete that. If this price comes up and pulls back like so, guess what we just made? We just made a lower high, right? Look, here's a low, here was a low, here's a higher high. If this pulls back and holds at this level, past resistance becomes future support. Now we've got a lower high, and now we can start seeing, hey, is this going to start making higher highs and higher lows and swing to the upside? Okay, so just trying to pull it all together for everybody, right? Especially some of our newer traders. But once you get it, you got it. We say that all the time. But the only way you get it is if you spend the time on the charts, right? Spend the time on the chart. You can't take signals and learn this. You can't. All right. So, and I know some of y'all out there, you don't want to let your brother borrow $5. So I know you definitely don't want to let somebody control your money with a signal. So just something to think about. So that's where we are on the pound Aussie. We're at a point here. Write this down, right? Or mark it up. Take a screenshot, okay? Because this is, we've been working on a project over the last week, so we haven't posted much in Telegram, but this is what we would post for you anyway. You got a new AB boundary. You got a possible B to C play here, 382, 61.8, like this. All right, here. So you can play to the downside, like so. Here, your TPs, or we look to get, all right, maybe that shallow retracement, that push up to that 118, 127, and then back down. If you're a bull and you say, Benny, I'm not playing your B2C mess, I don't want it, then that's okay. Just wait for the low price, right? You're looking at the same thing regardless. Wait for the low price. And when you come to a low price, okay, then if you're a bull and you get that discount, then you just go long for the continuation. Simple game. It only moves 3 ways. It only moves 3 ways. All right. So that's your pound Aussie. So that's a potential setup there. All right. Any questions on the pound Aussie? No?
No, sir.
All righty. Pound Aussie. I know I wanted to go through a few of these. So pound CAD. This has been all over the place. But you do have some bullish price action on the pound CAD here. You got a 50% pullback. I would love to see, right? I would love to see this push down. Okay, right? So look, A, B, C, D. Okay, so let's play it around with this. Look, A, B, C, D. Okay, but if you look at that, where we didn't get the breakout to the upside off of that 50% pullback, okay, this is a perfect example. Look, right? Okay, well, wherever that decides to end up, okay, if you come down, you got a Max Gartley right there at the 8.6. Okay, so look, AB, right? So that's your X to A leg. And then look, you got that bounce, and then we didn't get the breakout. Price didn't just say, you know what, I'm out of here. I'm in the C to D push zone. So if this continues to push down, then you say, hey, if I get this deep 8.6 retracement there, and look, it even gives it to you. Look, 382, 50, 61.8, top of the boundary, right? But we know ultimately that if this makes the U-turn at that 8.6, right? That's the beauty, right, of learning the fibs this way, that we know we could have these short-term targets here, but if we get an 8.6 pullback, then we know a 1.18D extension is the ultimate target that this price could go, right? So you could target that, right? I got an 8.6, and then bang, that's 145 pips. And if you want to use these short-term intermediate targets, maybe to do some profit taking on the way up, then you could do that. But technically, that's where we are right now. But this is also why, another reason why I love, if I'm looking long, right? This is why we love 61/8 or deeper, because it covers our behind as far as risk to reward. And we know that there's always a potential of a down ABCD move within the AB boundary, just like that. So there we are. All right, there we are. So little harmonic lesson there tonight for everybody. So up AB, down ABCD. If it lands right around that 786, 86 level, then you're looking at between a bat and a Gartley. This is what a lot of times they just call this a Gartley. That's just they just say, hey, price Gartley. All right. So there we go. That's why a lot of times I don't, if you have major structure at these levels, you may have rules in your trade plan and say, hey, I'll take a 382, 50%. If I look left and I've got immediate structure where past resistance is becoming future support, then I'll look to maybe take it after a trend line break and a few other confirmations having a stochastic in the right zone. But a lot of times this is what it'll move. This is what it'll do, because price doesn't just move in a straight line, right? It just doesn't. So that's it on the pound CAD. Any questions on that? No.
No, sir.
All right. We'll hit this pound Swissy. Take a look at that, and it's just marching, right? It's just marching. So again, Shauna, like here is, you see how you got this intersection here? right? We know if this price continues to make its waves up and takes out this A on this daily fib that I pulled down, then we know we're in the X, right? So it's like this, okay? We just moving along, right? If it keeps respecting that, like that, okay? And we know, right? We're in the X. And then look how it just continues to follow that long-term trend line to the upside, okay? So that's where we are on that. It's just climbing. It's just climbing. This is the pound Swissy. All right. So we may expect the pound Swissy to stay strong up through this trend line, maybe, potentially, but we got a stochastic that's in the sell zone. So what we're going to do is see how it reacts, because we never got to this 382, right? We know we've got pound strength, but we shall see. We'll see what the engine is going to be, right? Well, what the gas is going to be, right? To go in the engine as far as a fundamental catalyst to see if this is going to continue long, or if we're going to get it pushed down and finally get that 382. But right now we've got pound strength, okay? As we continue to make our way to this downtrend line, right there from the daily. Easy, 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 guys. Spend the time on the charts, you'll get it. Okay, look. So here's that downtrend line coming from way up high, down, and look what happens. Bang, it hit. Okay, swing high, we got to swing low when that wave finished out. And then look at the push, right? So that's one heck of a reversal play. This is that B to C move, right, that we talk about. Look at that swing off that boundary, okay? High point, 222 pips. Now it's just a matter of what it wants to do. We've got a reaction off of it. We've got a reaction off of it. Let's see if it's going to continue down or if it's gonna move up beyond it, right? It may continue down at this point. May have made its run, and it may continue down. We'll see. We'll see. But we've got a 50% pullback. Here's the D extension up here, but we know higher time frames control the lower time frame. So if it's time for this fib to run out to the upside and it's time for it to reverse, we will see. We'll see. But we got a small reaction off of it here. So when I zoom out on it, I see that it actually touched it. So we will wait and see if it's gonna get short. So we'll see going into tomorrow. Right now, my 1 hour, I got a stochastic in the buy zone, so I don't have that alignment. So let's see once we get up here in this sell zone what it looks like. So, like so, if we take these off now, this is where we are. Okay, we got pretty much an H6 pullback on this down fib up against this trend line, right? So let's just see what'll happen once this stochastic gets in the sell zone. Because once it gets in the sell zone, you'll have your daily and your 1 hour stochastic in the same zone. And we'll see how it reacts. All right. Any questions on that?
Hey, listen, I don't have a question on that, Benny, but I do got a question on that that pound IC. You showed that fib, that inner fib that was going, gave you the A to B. But on the daily, it broke my trend line and going north. Right here. See that right there? Right there at the end. So I'm kind of hesitant to do a short on that because it broke this trend line on mine. It broke this trend line right here.
Right. So let me ask you this, right? We got a stochastic in the buy zone, right?
Right.
So we're thinking, yep, on a daily. But we're thinking long, right?
Correct.
Okay, so we're thinking long. We're bulls. But when we're long, does the market just go straight up or does it move in waves?
Okay. Okay, moves in waves, which we asking yeah, that question becomes almost a rhetorical question, right?
No,
moves in waves.
It moves in waves.
Right.
Right. It moves in waves. It moves in waves. Right. So at some point, right, we look for the potential for this to do what? Pull back. Right.
Okay.
So,
Okay.
so we know that from sell zone to buy zone to sell zone, you're looking at between 7 and 11 candles, right? And that varies depending on the speed of the market and the ATR on the pairs, right? But typically between 7 and 11 candles. So if I'm on a daily, that means between 7 and 11 days, right? Sometimes the market can get impulsive and it can move faster than that, but typically between 7 and 11 days. So if you come here and you put your daily candle overlay on this, right? Like so, okay? That's what we look like from the daily, okay? So you see all the waves within the candles, right? So this was a bullish candle. This was a bullish candle. This was more of a doji, but it was bullish. This was bullish, but you see all the waves that's happening within the candle. Hold on one second. Okay. So you kind of see the concept, right?
Yeah, I see it. It's moving. It's moving in waves. Yeah, right. And when
Right.
it's at it's at a back, right?
Right.
But on the daily, that's where I get kind of, because I got the same markup you got, same markup, but this is a sub fib on it. This is the fib back there's the fib I had on it, which it got a I played the B to C, and it was this pullback, yep. And it's at the 618 actually on my actual fib. It's at the 618. So I mean, I can see playing them both. I can see playing because it's on the 618 on my actual fib, and then the sub fib is at an A to B. So you know, I want to play it, but you know.
So let me ask you this.
I don't have a problem pulling the trigger.
I know you don't.
I know you don't. You like jelly and peanut butter, baby. You know how that works.
So let me ask you this. You're a bull, right?
Yeah, but I play the short though, you know. Right. I'll go both ways on it.
Right, but where's your confidence at though? Right, where's your total clarity?
Okay. Well, my confidence is the bull. Yeah.
Okay.
Well, I mean, if it pulls back, you know.
So if you're a bull, and that's what you're most confident in, then wait on your discount. Wait on your discounted price, and sit on your hands, Phil. Sit on your hands, and just wait for your low price to come in. Wait for your low price to come in.
I'm waiting on my low price. I might as well take. I might take share of the low too, because I need the low and the high. You know what I'm saying? I mean, I need to get high, and then I need to stay low too. I need to come back down. You know what I'm saying?
All right, I got you, man.
Hey Phil, let me ask you this question, man. Let me ask you this question.
What is going? Go ahead.
I love it, man. So let me ask you this: what's your fear in taking the B2C move? If you know the market moves in waves, what brings you fear?
No, I'm looking at the daily because you know the daily is at the end it's going up. You know, it was a up retracement.
Yes, it's moving up, right? But
right.
Is it true that the market moves in waves on the daily, the 4 hour, the 1 hour, the 15 minute, the 5 minute, the 1 minute time?
Right. It does.
So if that's true, then on the 1 hour time frame, will the market move in waves?
Yes.
Okay. So if the market moves in A, B, C, D waves, is there an opportunity to trade the B2C move?
Exactly. Yeah, it is. It is.
Right?
I mean,
So if all that's true, now the last question is, do you have the B2C move written into your rules?
I do. Yeah, I do. Yeah.
Okay. So if you have it written into your rules, right? Why are you afraid to follow your rules?
I'm not.
Your
I'm not.
if then
I'm
statement.
I'm not. I was just confirming. I was just saying I got the same setup. I drew the same. Mine looked just like his, and I was just saying that because I was gonna do the short, but I just kept looking at the daily, and it was going up.
Yeah.
That's all. I mean, I was looking at both charts. I'm looking at the day. I'm looking at the hour, and I'm like juggling them basically. That's what I was saying.
But that's what you can do, right? Because we've talked about it, right? Where you can play the long, right? You can play the short to get that discounted price, and then add to your long trade if you kept that trade open, right? Those opportunities to play both sides of it, because you can just trade one pair on a 1 hour time frame and make a whole lot of money just using the fibs, right? A to B, B to C, then C to D, and you can just flow with it, right? So the whole point of me asking those questions is, if it's written in your rules, you got to pull the trigger.
Yeah, that's true.
If it meets your rules and your risk management is intact, you're not over trading, you're not chasing anything, right? If it meets your rules, you got to get to the point where you're pulling the trigger. Right? Because
I don't have no problem with that. Like I said, I ain't got no problem with that. I ain't got no problem with the trigger at all. Trust me. I would
but you sound
I don't. Seriously, I really have no problem with the trigger. I was just asking because I was looking at both time frames. I guess that's what I was saying. I was just looking at both time frames, but I truly don't have a problem with that. Like I took the north. I took that, right? I got like 145 off of it. And then I took the on this 1 hour, I took that, and I was gonna play it coming back down. I just looked at the daily, and then it gave me a pause. That's the only reason I said that.
And so all we're saying is, yes, the daily is moving up, but on the 1 hour, there's still going to be smaller waves that play out. So there's an opportunity to play that B to C to catch you to TP1 from where it's at. I think it's like 50 or 60 pips, right? 60 pips back to TP1, potentially TP2 or TP3. Right? If it gets to TP2, that's an opportunity to add back to that long trade, right? So you can feel comfortable playing it on both sides if it meets your rules. That's all I'm saying, right? Even if the daily is moving up, which we know, right? Our target on the daily is potentially higher, right? Because of the retracement that it gave, 50%, right? So we know our long-term target is north. But in the meantime, we got some smaller opportunities that we can play. And you can feel confident playing those, right? As long as you manage your risk. That's all I'm saying. Is you can feel confident following the fibs, right? Even if it's taking it to right, whatever your rules say, if it's taking it to TP1, right? If it's your risk manager gives you a 1-to-1 or 2-to-1, right? Swing high.
I'm gonna actually get in. If it pulls, because that one candle was kind of big. So if it just pulls back a little bit on a 1 hour, I'm gonna take the trade. Because it kind of got deep. See, it already, I didn't do it all the way down to the 15 minutes. I did it to the 1 hour, but
yeah, that's moving. Yeah,
it's already moving. So I'm saying if it pulled back, if it just touches that trend line there or touch this one here, then I'm gonna jump in it on the pullback and then just a little bit because it's moving now. So
yeah. I feel you ask great questions. I know a lot of people thinking anyway. That's why I love it. I love it back and forth in the dialogue. So
heck yeah.
Awesome. Yep. All right. So that's the pound Aussie. So right there in real time, we just got a pretty good U-turn on that. That's got to be what 35, 40 pips. I think when I measured it was off that bearish candle,
something like that.
Yeah. So
I did. As you were talking through it, I took it off the B boundary.
You did?
Yeah.
Nah, I didn't.
I took it off the B boundary.
I didn't.
I did too.
See, y'all. See, I don't have a third hand. I don't have all my hands free. I'm right now, and I'm on the mouse. See what's going on.
Hey, you just gotta tell us to hold on a minute, Benny.
Man.
Plug that one in.
It's all good. It's all good.
Grabbed it too.
Wanted to check. Thanks, y'all. Appreciate it. So here we are on the take a look at this this pound yen, right? We've been battling this downtrend line for quite some time. We've got a sideways push, but it too is in the sell zone. All right. So we're just consolidating. If you look day by day, right, it's just been consolidating 1, 2, 3, 4, 5, 6 days, right? We just kind of just been, it's a fight right now. It is a fight. Okay. So if you go down to the 1 hour right now, we're just in the same situation, right? Same situation. This is really just a consolidation. So we need to see, well, it'll tell us what it wants to do. So everybody put this one on your radar. Put this one on your radar, because it's going to make a decision either way sooner or later, right? So if you zoom in on it off your one, what is going on? Hold on. Where fibs just go? Anyway, we it's pressing up against this trend line. That's where the price action is, and it's at a key fib level, and you got right past support that broke through daily. That's becoming resistance now. Okay, it's a resistance level. So we're going to see what happens. Again, we're at that crossroads on a lot of these pairs. All right, so we'll see what it's going to do. So that's where we are on the pound yen. Take a look at the pound New Zealand. Okay, and we can look and we can see that this push down, it finally broke through this consolidation. It's making a U-turn at the 61.8. It's in the buy zone. Okay, but we know overall that New Zealand is pretty strong. Pound is showing some strength. So it's going to be interesting to see how this moves, right? If we take this down to the 1 hour, right? Down ABCDs in our sell zone, just going along with that downtrend line. And then we've got the reversal and the break all the way up to TP2. So off the B boundary, you got a swing. Don't look like much, but that's 160 plus pips, everybody. 160.
Ron is in this one nice. We talked about this one this morning.
Ron
is in this one nice, man.
Good.
Great
good.
call in, Ron.
Now I'm riding it back down.
So that's good. So we're pretty much at TP2, and we shall see. But the pound New Zealand, anything with the New Zealand always gets all of this mess a lot of times. So that's where we are on that. We already covered the pound dollar. We'll take a quick look at the, what is it, CAD? It was one of these pairs, right? So this is how I had the CAD marked up off the daily and off this fib to the upside after this trend line break. So it took it off this down trend line like this, and we see where price it retraced, right? We pretty much got a double bottom at this 786 level, and it went right up to that extension off the daily, right up to that extension, just like that. ABCD from the daily. And if you look at how that looked at the one, look at that. Played out beautifully. Now, that's the one I wanted to go over. Yep. So if you look at this, I'm gonna pull this stochastic off. We know that we just came into a daily D extension, right, off that daily fib, but it's also in confluence with a 118, 127 1 hour fib zone. And it's with virtually no retracement. We didn't at least get a 382. So what we want to do is we want to keep an eye on this, because we know that a daily fib, a D extension has been hit, which kind of signals the potential for a reversal. It's forming this high now. Okay. So pay attention to this one to see if you get a trend line break, right? And you start to get that inner to outer trend line push to the downside. So your outer trend line is right in confluence with that 382 right here. Okay, so that's another one, everybody, to make sure that you keep an eye on is the NZD CAD. All right, nice clean markup there. Inner, outer, your long-term trend line. Okay, and here was that daily D extension, right? And you can see that price is starting to reverse. All right, so if you haven't already limited in on that, that's another one that you want to keep an eye on. Right at this trend line, right? We see last time it popped right off that trend line and continued long. Let's see what we get now. Okay, we don't have a 1 hour stochastic that's quite in the sell zone yet. Keep in mind too that it's the Asian session, things are slow. All right, and so keep an eye on that one for through the night tomorrow and going into next week. on the NZD CAD, NZD Swissy, right? Here's your daily time frame. We got a beautiful pop off of the 61.8 retracement level. Look at that, right? So again, Phil, this is another one of those situations, right? Right? Another one of those situations. And I'm glad that you brought that up, because that when you look at that day, man, at the close of Friday, if it doesn't take out this high, then you will have a new AB boundary off a sub fib like this. Okay. Like that. Okay. And we should already see this up move happening on the one. See, look, that's that huge impulsive move. So look, if I take this, okay, and I keep going over this over and over again, because I just want everybody to see it visually, right? Larger waves, smaller waves. So that means a larger fib, smaller fib. So if I copy this soon, hopefully to be, we don't know yet, may push higher and take out that high. But if this was going to be our new AB fib, if I trace that down, look at how it just kind of engulfs all of those smaller fibs. See, that's that fib right there. So if I took off these smaller ones like so, there you go. Okay, that's what that would look like, but it hasn't completely formed on the daily time frame yet. But that's what we're looking at. So you've got it right now where we've got a 382 that tapped and then it pushed up and it came right back down. It's almost like a double top type of look at that B boundary. All right, and now our stochastic is in the buy zone. So we're kind of just ranging, right? We're ranging right at this 382 level and above it. So between the 382 and the B boundary. Okay, so let's see how it plays out, especially going through tomorrow. See if it closes out and that candle gives us that second candle to the right. Okay, and then see if we get that new AB boundary and see if we start to get that retracement, because our stochastic on the daily is in the sell zone. So we shall see. All right, so that's one that we're waiting on. And JPY, look at that. That's just taking its time, but it's just moseyed on down. Okay, so a quick look at that one. But you can see how it reacted, right? Look at the reaction off of that long-term trend line right there. Right, so we know how we played this one a while ago, right? You had your down fib, gave you the B boundary, and then you played the reversal. So that would have taken out all three fib levels. So for example, if I pulled this one down from the daily, it would look something like that. And you played a B to C move, and you would have got all three TP levels on that. Like so. Okay. So that's where we are on that one. So just kind of a wait and see. Let me look at that daily to be exact. Yeah. So there we go. So you had your down AB fibs, you had a down AB fib there, and it took it out. So now we're in the sell zone. So we're still in that potential correction phase, right? So if I drew a downtrend line here, like so, like that, you will see where it got broken. So if I link that down, okay, see that? Just like that. Finally broke our trend line to the upside. Okay. But our daily stochastic is in the sell zone. So let's see what's gonna happen with it. See what's gonna happen with it. But right now, based off of this 1 hour, that's a nice little 80-20 reversal potential, right? If you're in that, you got it to swing back down. Let's see if we can get that 382. We'll see. All right. So that's all I've got to cover for tonight. I think somebody asked me earlier about the UJ, and
real quick, Benny, sorry. Wendosen, you got a question, bro?
Yeah, I was gonna hold off to the end, but I use the stochastic RSI heavily when I scalp. So you were saying that it's usually 7 to 11 candles. Is that on all time frames?
Yep. That's how I was taught with the stochastic. that we use anywhere between 7 and 11 candles from between the zones, right? And that's typically how it averages out across all the ATRs. Of course, we know that each pair they have different ATR levels, right? But on average, that's what you'll see, right? So something to think about in the cycle. Yep. So if we see, I'm just gonna look at this UJ real quick because it's dancing around. I had a question on that, but this right here, this is it. That is a, call it a symmetrical triangle that you have right there. So let's see. I think it was there. So if you look at this here, right? So, and some people call that a flag, right? Because you got your flagpole moving up. But if you look here on this higher, let me go to the monthly. Let me zoom out on the monthly. This has been dancing around forever. But if you look, I'm gonna clear all this out and just look at this pattern, this price pattern. If you look here at this level, you got, okay, a bit of, I'm just gonna pull it so that it's parallel like this, and like that. Okay. Okay. So you can see that, right? And you see here. Okay. Okay. Right into that, right? So that's a classic breakout pattern from your higher time. Okay. I was ready to call this a descending triangle until it pushed up, right? Because you can see here, it's just making low, but then it pushed up back equal with it. So typically what this will do is this will just play around, right? And continue to bounce, right? If it's ascending, you're looking for a break to the upside like this. But this is more, because of the way that last leg just pushed up, to me, that's more of a, it's pushing down still. The way it's just pushed back up. So I want to call that a symmetrical, but it's kind of in between. But so you're looking for a breakout, right, of this triangle, this triangle pattern here, right? So that's what, and watch about that. So that's what's going on. That's why the US it's been bouncing around for a while. Okay, but that's what you're looking at. Sometimes, hey, just zoom out, right? Like we said yesterday, it's kind of hard to see the picture when you're in the frame. Okay, so we kind of just, it will break out at some point. It's gonna break out at this level at some point. Okay, due to, you know, dollar strength or extreme dollar weakness, it will break out of this level. So I just wanted to go over that and what's going on with that UJ and why it seems like it's kind of just dancing all over the place. But when you zoom out, it kind of makes sense and you start to see why. Okay, so just a classic pattern that you see in the market, especially from the higher time frame. So we'll see eventually where that pattern wants to break out, and we'll track that from the lower time frame. So even if you drew, am I clean on this? Let me clean this up. So it's hard to see it, right, when you're in those lower time frames. But one of the things that you could do is you can kind of just take your ray tool like so, kind of just draw it straight down. That's too big. That. 3. And the high time frame, kind of just link that down. So you kind of always know, right, where you are. Okay. And you know that that's coming from way from the higher time frame like that. Okay. So we'll play around with this some more this week. Want to make sure that we close out. We've been on here for a while, but that's what you're looking at from a high time frame from your monthly. Is you're looking at that pattern right there. You got a triangle going on. So with that being said, that is all I have. Any other questions, right? Hope you all got something from tonight's session. If you have any questions, let's make sure that we ask them now before we close out.
Hey, Benny, I got a quick question.
Sure.
Hey,
Hello? Hello? Can everybody hear me?
I can hear you. I think we lost Ken though.
Oh,
for
man.
that B2C move, I haven't taken.
Hey Ken, your audio is breaking up, man.
He said, what did he say? A GA?
I didn't catch it.
Hopefully he comes back.
Benny, can you look at that AUD NZD real quick?
Yep. That's what we're looking like from the 1, right? That's what we look like from the 1 hour. So it's kind of just been consolidating. It dropped off. This is our lowest low though. So this trend line here, the reason why it's not going over top of this level yet is because this is the lowest low. If this low pushes lower, then you adjust your trend line up above there, and then you have one coming down, right? So it looks like it's starting to, matter of fact, it's close. We're going to do that right now. I'm going to adjust that right now. That's a smart trend line, so I got to adjust it. But that's how the smart trend line, that's why it hasn't adjusted it yet, because it'll automatically adjust it for you. So take this here like this, like so. Oops. This off. Oh, there we go. So that's where we are. We're still hovering. We're still hovering. An aggressive trend line, you go down to the 15, is trying to make a U-turn, but this has been a weird one. So let me check the support levels on this. Yeah, so that's close. That's close. So I'm glad we adjusted that now. So you're looking at here, this is pretty much the zone where it seems like this price is trying to double bottom, right? Like that. So it just depends on how aggressive you want to be, right? So we take this here. We still didn't get Ken back. So we take this here like so. I don't just feel why did it do that?
Yeah, I'm back, guys. I'm sorry about that.
Hey, what's up, man?
Hey, lost connection. Sorry.
It's all right. It's all right. It's cool. Hey, okay. Let me finish this one up real quick. So if you're on the 15, right, and you're playing off that, it's hard to see it on the 15, but there's that double bottom. What'd you say?
I think you're on the 5.
Oh, was that on the 5? Oh yeah. No wonder.
Yeah.
Well, shoot. It just shows you, hey, it plays out the same. So let me clear that and make sure I got you right. There we go. All right, so there you're on the 15. So now I can bring that into view. So here's that zone on the 15. Right. Let me link that down. Zone on the 15. I'm gonna take this down to the 15 with me. Here's this first TP. I'm gonna take that down along with that second TP. And we're gonna worry about that third right now. And so we're looking like there. Let me. Here we go. Like so. And there's the more aggressive trend line coming off that double bottom. All right. So if you want to play this aggressively, there's your double bottom type action now. Okay. Now you got this trend line to break. We can zoom in, and this is what's going to tell the tale because we got a high that formed. So on this setup, if this wants to start making a reversal, now that I got this high that formed, I'll go to my 15 and I can play a fib off of that like this. Okay. And let me apply this simple like this. Okay. So that's where we are on that. We're headed down to being oversold, like it consolidating a little bit. Let me see what we got. Do we have anything on this one yet? No. We don't have a fib on the one yet. We don't have that second candle to the right. Because once this forms like this, okay, because that move already completed on the other side, once this fib forms on a one like this, you can pull it and just make it one fib on the 15 instead of the two that you see. It's just a smaller wave on the 15. You see that? So like that. Okay, so yeah, you get that concept. Like so. So if you wanted to like that, okay, but we don't, keep in mind, we don't have that second candle yet, but that's a cleaner look. Like so. So we got this stochastic here. It's headed down to being oversold. Okay, so it tells you about where the momentum is and when it might shift. And we got a break. And if you come back down here to structure, you're right in a 61.8 zone. So if you get a pullback like this on that play, this, and get that push down like so, around this level somewhere. Hold on. And it bottoms out for you like that. Then what you can do is you can look to take the trade. If you get a deep one like that, that'll be beautiful because you can put your stop right here at this point. Okay, you can play that just like that. All right, 61.8, 786 pullback. Right, look at your risk. Right, and if that trade continues to pop off and move to the top side, there's your TP from the 1 hour, 124 pips. Right. And your risk, that's something like, that's insane, right? So let me okay, like this here. So if you came down around your 61.8 zone and then started the U-turn like that, that's like 11, 12 pips, right? You got 100 pip upside, okay? So you could play it smaller and get out at these levels, ABCDs, and ride your smaller ABCDs. But if you're thinking 80, 20 off the one, then it's like, yo, I might have a 100 pip trade here with a stop loss that was like 12 pips. So, and then if you want the extra confirmation, you could just, when it comes time, just draw your counter trend line like that, right? So just draw you a counter trend line and wait for it. And if you get that pop, right? If you get that pop off of it, then you can look to go long, however you want to play it, But if you get that deep pullback, that's worth a shot. If you get stopped out, you take the stop, that's cool. But the upside potential to that is enormous. So
thank you.
You're welcome. You're welcome. Ken, I see Denise had her hand raised, but Ken, what was your question?
Yeah, on the GA.
On the GA?
I haven't had many opportunities doing the B2C move, like shorting it.
Yep.
Like some, I would go in with the B and then, do the whole 80-20 setup. But on the GA currently, it's going down. How would you, because I want to get my profit in before it retraces back up. Potentially it'll do that, correct?
Yep.
So how would you play that? Would you just have like a trailing stop loss, or you just kind of continuing monitoring it before it pulls back up? Or
you talking about like when it finally makes that U-turn and go back to the long side?
Yeah.
Yeah, you can end up using a trailing stop. You can put your TPs in, right? So you're talking about more of from like a scalping perspective, or once it gets down to these levels?
Yeah, to any of those levels.
These
I
levels?
just, yeah, because I mean, it could take a little bit of time to get down to there, right?
Yeah, absolutely,
if
absolutely.
it
So
wants
what you
to.
could do, yeah, you could use a trailing stop. Of course, you put your TPs in so that if it does hit that level, it'll take you out the trade automatically, right?
Mhm.
So you can put that in, or like I said, you can put a trailing stop in your MT4, or like some people use, especially Juan Wilson, you could put in 2 orders. So say you were trading at $2 a pip, right? Just put 2 trades in. Like on this trade, for example, you could put 2 trades in at $1, let one go to TP1 and the other one go to TP2, right? And when you get, because think about it, if I put 2 orders in, they're both going to hit TP1 at the same time, correct?
Mhm. Yep.
So one will be off the table, right? You add that money to your account, but then on that second trade, you could just move. You could just move your stop to break even, right? So now that's a risk-free trade, and then you can either monitor it manually or you can put a trailing stop in on it. So you can just kind of twin trade the price action if you want to. You know, Juan Wilson, I know he'll break it up into thirds, you know, for TP1, 2, and 3. And then just let them ride, right? And then just adjust the ones that are still active. You just adjust the stop loss to break even, and then eventually into profit.
Okay, I got you.
Yeah. So
Cool.
some ideas there. Yeah.
Mhm.
Good question.
Thanks.
You're welcome. Who else had the question? Was it Denise?
No, I asked you. We're good. Thank
Oh,
you.
you're good. Oh, okay. You're good. Okay.
Mhm.
I saw that hand raise. I'm late. All right. But yeah, dang, this is pushing down. Catch it on the next one. But
That's what I said.
yeah, eventually it'll form a low and it'll pull back and see if it wants to continue. But it
Hey,
coming into a zone.
you
Man,
guys see that big old engulfing candle on pound New Zealand?
wow. Let's see. Yeah. Starting, ain't closed yet. Ain't closed yet, but look at that push down. It's beautiful how this market works. It's beautiful. Nice. Get some action tonight on the Thursday night on the Asian session. Jeez. All right. Take it.
Tons of action, man.
I know, right? All right. So that is it. It is 11 o'clock. This has been an awesome session. And yeah, I appreciate everybody being here tonight. Ryan, do you have anything to add before we close out?
No, sir. No,
No?
sir. Phenomenal session, bro.
Appreciate it. Appreciate it. Right. So we'll get more next week when make sure we get more into the cryptos and things like that we like to take a look at. I didn't really get to go over them a lot this week, but make sure we get back into some of those since they hit some key levels here recently, especially Bitcoin. So all right, everybody. Everybody have a great rest of the night and an awesome Friday, TGIF, and then we will see everybody Saturday for the Forex Weekly Ritual. All right. Good night.
Have a good one, guys.
Have a good night. You're welcome, Danny. See you Saturday, Diamonds.
Good night.
Good night.